With more money entering the stock market, investors have ignored the economy. That's not wise. You came here for the truth, so let me unveil that for you. Today, we're going to look at several factors surrounding this issue. We're looking at parallels between what happened back in early 2020 and today. That's not a good thing. If you look at the first issue of today, the debt cliff, I think it's really important that people understand what's happening with the amount of spending that's being done. Number two, we're going to look at helicopter money because that is apparently the solution to all problems. And number three, risk appetite. All of this connects into one. I'll try to bring that all to you today. Let's go. Your favorite and mine, Janet Yellen, wants debt limit raised by August 2nd, warns the U.S. may need, quote, extraordinary measures to avoid default. Are they going to increase the debt limit? Are they going to increase the spending? The answer is, of course, yes. Yes! You don't have to worry about that because they always do so. In connection with that, this article here basically just says, economists say default, though extremely unlikely, would be catastrophic and would pose a significant threat to several sectors of the American economy. Look, they're not going to default in the way that some have talked about, where that's it. We are keeping our hands tied. We're just going to lean back and we're going to let this default. No, they're going to default in that they print money into confetti and they pay back with this confetti. Nobody wants to take it at some point. That's the way it goes. They're not going to simply not increase the amount of spending. We know that's the case. We know that's what they're doing. This is from the Committee for a Responsible Federal Budget. All right, you could see the money tracker, administrative actions. It's just showing you, by the way, the amount dispersed and over committed and the amount allowed. So you can see the difference between the administrative actions, legislative actions, and the Federal Reserve actions. All of this together simply just shows you how much money has been put out into this system over this short period of time. You can't ever rein that back in. You can't ever simply just walk it back. It doesn't happen. Never has. Look at the amount of money that they pumped into the system. And we'll talk more about that in a second. In 2008, 2009, 10, and so on, and compare it to today. It seems like nothing compared to what they're doing. There are, more details related to it, but I just, it breaks it all down. I think it's important people understand the breakdown of it because it's not just one big broad number. Ultimately, the people, the middle class, they get the short end of the stick. It's a simple matter of fact. All right. Out of Bloomberg, this is connected with it. Look, fear of soaring deficits was a key reason the U.S. skimped on stimulus in the wake of the 2008 financial crisis. Okay, so right there, you ask yourself, wait a second, what? Did he read that right? Yes, this article is about MMT, talking about how this is what is needed. If the government would have only pumped more money into the system, things would have been okay. But of course they did. At that time, pumping in more money into the system than they ever had from the beginning of the country's creation up until that point, in just a year or whatever it was, a short period of time. This time it proved less of a deterrent, and the economy is bouncing back much faster as a result. MMTers see it as an important win. Look, there's a very different situation from the financial crisis to what happened in 2020. You can't say that, oh, well, you know what, the government, they did such a great job. It's fantastic. This is why. And so we should do it again and again and again. And therefore, we should have helicopter money because clearly it works and doesn't create a problem. See, as they say here, the anxieties about large deficits. It's the long-term problems that stem from their actions. Look at a country like Lebanon that are dealing with some serious hardships. This breaks down Some of the problems that they face today. Lebanon's people line up in queues of humiliation as their country unravels. Now, of course, there's always two sides to a story, but there's no doubt that they've got problems today. Fill her up. Be ready to wait in a line at least an hour, assuming the gas station is open, that is. Need medication? Something as basic as aspirin could set you back on a day-long hunt from pharmacy to pharmacy. Even a grocery run is ever accelerated race against the ballooning prices of a failing currency, and whatever you do, you need to time it around the power cuts that can last up to 23 hours long. Not good. Now this just shows you that things can go from being great to being good to being, well, I wish things were better, to very bad in a relatively short period of time. I'm not comparing Lebanon to the US. I'm saying wherever you are. Remember, it goes down locally too. In Lebanon, I'm sure there are areas doing much better than others. Areas that probably don't have blackouts like they do in some places. That's not the point. The point is that it happens faster than you think. If you simply read history, if you look at the news on a global scale, you realize how this works. You've got problems today with inflation that personally, I don't think people understand. And bank after bank and, analysts and all the big time investors, Stanley Druckenmiller and so on, have been talking about what's happening with inflation. The vast majority of them, including Bank of America, which we'll talk about in a second, have said it's transitory. But now they've all been expanding what that means to them. Bank of America expects U.S. inflation to remain elevated for 2 to 4 years against a rising perception of it being transitory, and said that only a financial market crash would prevent central banks from tightening policy in the next 6 months. 2 to 4 years, transitory. Does that make sense to you? What does that even mean? What is transitory? We're transitioning to a new world of high inflation? Is that what it means? It means, it was 2%, then it's 5%, then it's 10%, then it's 100%, then it's 1,000%. Yeah, sounds good. Transitory. Okay. I mean, these people are out of their minds. Crazy. And I can't believe the alternative media is saying inflation's transitory, and so, let's deal with it, let's buy the dip and so on, but not even getting to the root of the whole problem. What's happening here? Get with the program, people. Wake up your friends and family if you have to. Yell and scream at them. We've got no time for this. Because the problem is, if you're informed, and they know you're informed, when the stuff hits the fan, guess who they're going to come for? Guess who they're going to come for? If you think I got haters now, just wait. Just wait till what happens. It was your fault. You're the one who's responsible for this. If everybody would have just done this and this, then nothing bad would have happened. It was fascinating. So many deem inflation as transitory when stimulus, economic growth, asset, commodity houses, inflations are deemed permanent. That's true. And then, of course, whenever you have inflation, whenever you have shortages, whenever you have a problem, there's always going to be somebody out there trying to deal with it. And in this case, thieves in California are stealing scarce water amid extreme drought, devastating some communities. Stealing scarce water. So I don't know how widespread this is. Nobody knows. But I'm just suggesting that you've got problems today for different reasons, but just the way it works is that, when there's a problem like this, unfortunately, things generally get worse before they get better. All right, let's look at this quickly before we get into the GPS insights. On Monday, Apple told its workforce that it would push back its return to office date from September to October. There are many examples here in here actually. Are we going to go back to the office? Are we not going to go back to the office? Because I think people need to get wise to the fact that office and retail are probably some of the weakest points in the markets today as it relates to the derivatives and the economy as it relates to the jobs that are surrounding all of these things. Let's get into the GPS insights right now. Number one, this is the biggest bubble of all time. Stanley Druckenmiller had just come out and said this exact same thing. Number two, let's get it straight. These assets are being inflated by, number one, the stimulus, and number two, the quantitative easing. Number three, a crisis would have money fleeing into what's called safe haven assets, which are generally US dollar, US debt, and of course, after some turmoil, perhaps precious metals as well. Bonds might see a huge amount of inflow into it, particularly in the US. But of course, you would have a strengthening perhaps of the US dollar. There's any number of things that could happen here. It all depends on how it unfolds. But generally, the market will be looking at a very different world, and that would be safe haven assets to really take the charge. Manufacturing PMI, you could see month after month after month of growth. And also, looking at one more company, Whirlpool will be hit by $1 billion worth of inflation this year. Here's why they're still winning. It gets into essentially the fact that they have to spend much, much more on their, all the raw materials and so on. They're going to hold off on any price increases for now. You add on to that, this here out of Bloomberg, the working age population has stopped growing. I think this is a problem that's going on in many different countries. And of course, that's never good because you got to pay into the Ponzi scheme to keep it going. You absolutely cannot create indefinite deficits. It does not work. Long term, it's going to be very detrimental. Connected in with all of that, of course, economic data released from the IHS market showed that business activity in the US private sector continued to expand in July, though the rate of growth eased. So this is just showing you that certain sectors, certain pockets are doing better than others. Looking at the markets, you got to be aware of what's happening today. It's not one-sided. Don't look at whenever I see people looking at the price, I know that these people are truly uninformed. Truly uninformed. The risk appetite indicator has overshot the decline in macro momentum. This is just showing you here, shaded areas, the ISM slowdown, ISM greater than 50 and falling. This is the risk appetite indicator that you can look at, which is from Goldman Sachs. Elevated valuations coupled with fading growth optimism or rising volatility can increase equity drawdown risk. Probability of an S&P greater than 10% drawdown in the next 12 months. So that has really shown us, if I can get that right here, that's the sort of the shaded area. And there's many different indicators to look at on here if you want to check it out. But essentially, we can see it on all different levels, okay? These indicators have gone into new territory, but they're just saying that because the Federal Reserve is there, you don't need to worry. But the Federal Reserve was there in 2020. They were printing money. The Federal Reserve was there in all the previous instances, the smaller ones and the larger ones. They were printing. So it actually doesn't work like that, okay? Just so we're clear. Money supply measures showing you M1, M2 base, and M2 minus the Fed's balance sheet. Take your pick. They've all gone up. And what does this do? This devalues your currency. It essentially robs from you every day. We need to be aware of that. Money supply measures just showing you in terms of percentage change. Yes, that has come down. I mean, initially it was a huge surge, more than we've ever seen before by far. And that has come down in a percentage terms, but it's still out there. Once you release it, where it goes, where she stops, nobody knows, right? Car chip shortage to abate. Smartphones could be next. This is a Reuters article, and I just wanted to show you the fact that this is going on all across the board. There are problems everywhere, but I think people should be aware of what's happening. Keep in mind, as an investor, as an individual, an astute individual, you have to deal with these things yourself. What does that mean? If you're talking about food prices increasing, how are you going to offset that? Are you going to grow a garden? Are you going to get some storable food? Are you going to buy in bulk? If it's the, investing side of it, are you going to invest in the commodities that have been increasing? Are you going to change your portfolio so that it's a little bit more risk adverse? These are things to remember, all right? Look, if you want to know more, you got to join the Insiders, because that's where I get to you directly. You can sign up for free. I'll put a card up here, or you can sign up at themoneygps.com. If you haven't if you haven't given a thumbs up already, you got to hit that thumbs up button. Please do. You support the channel when you do. I'm on Instagram, I'm on Facebook, I'm on every single platform. Check me out at themoneygps. If you haven't seen this video already, you got to check it out. Click it, and I'll see you there.